Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals, and gold prices took the bear plunge, trading down to almost 1170 for a little bit of a bounce, got us off those lows, but lowest price we've seen since January 2017, so it's been quite a while. And if you take a step back from a macro picture where we are on the technicals, you're looking at levels like 1125 and 1050 as your next big support levels, which I know are not in play right now today, but if things keep trending the way they are, those are the two levels I'd look for on a macro basis. Again, not looking for that to happen on Monday or Tuesday of next week, but it shows you where we were just talking about 1400 a few weeks ago, maybe a month ago. It looks like things are really turned here, and it all comes down to one isolated variable. Yes, it is the US dollar. That's what started this move. That is what continues to push metals lower. We saw it not only in gold, we saw it in copper. We're seeing demand for copper slightly down as issues with China, but that's another story. And we're looking, as far as gold goes, it's kind of getting lumped into that. Palladium, gold, copper, all of them getting waxed this week and seeing new lows put in. And the dollar rose to the highest it's been all year, which is significant. Although it did settle on the weekly lows that it had this week, it was still in a very much a bullish trend upwards, which is going to continue to put pressure on gold prices as the gold-dollar relationship reverts back to the old ways, not like we saw during much of the last couple of years when gold prices traded sideways to up and the dollar was trading down to sideways, and it didn't look like there was much correlation there, or at least it wasn't the exact correlation we're used to. And lastly, the speculators, what happened to them? Are they bullish? Are they going to get back in and support this market? Well, according to CFTC reports, they are short for the first time since 2001. It goes to show you that that is going to continue to put pressure on gold prices if the speculators aren't on board to get long. Those are typically the entities that get us and begin. You see those trends start and they jump in ahead of the dealer community, but we're not seeing that now. They're short just a tad. We're talking just barely breaking under the zero mark, but it still is a net short position from the speculators. Again, something we haven't seen in almost 18 years. But we'll have to wait and see what happens next week. We have Federal Reserve speakers, including Chairman Powell speaking from Jackson Hole. We have the FOMC minutes on Thursday, so we do have some gold-related, dollar-related things that could move the commodity around a little bit, but that doesn't come until Thursday and Friday of next week. I do believe we'll see a modest relief rally, at least until we get to Thursday, and then it'll all be about the dollar and the Fed. And if they see rosy roads ahead, then I think that the dollar will continue to bid, and we will continue to see gold prices suffer. This is Todd Colvin coming to you from the floor of the CME Group.